Okay, Bismillahirrahmanirrahim. Now let us continue to look at the flexible budget. This one is a case study. So a Fox company's management uses a flexible budget. So this company uses flexible budget for monthly comparison of actual and budgeted manufacturing overhead costs of the finishing department. So you are doing a flexible budget on a monthly basis. Of course, you are comparing the actual and the budgeted figure. And then the master budget for the year ending 31st December 2022 shows expected annual operating capacity of 120,000 direct labor hours and the overhead cost. So this one, for the year ended 31st December 2022, we are being given the expected annual operating capacity. So that is the annual operating capacity. Over the years, you expect to have the 120,000 direct labor hours, and you are doing a monthly comparison. So you are being given the information about the variable cost. So you have the indirect materials, the indirect labor and utilities, total of 480,000. And then this one is your fixed cost. So you have your variable cost, you have your fixed cost, your depreciation, supervision, and property tax. So this one is your fixed cost. And then as we have seen just now, 4 steps how to develop your flexible budget. So the first step is to identify the activity index and the relevant range of activity. So you know that you are using is previously we look into the production units. Okay, that is the level of activity, and in this case you are using the direct labor hours. So that is your activity index, and then you are looking at the range of 8,000 to 12,000 direct labor hours per month. This one, how do you get this one? This one is given in the question, okay? In this case, let's say you want to find the relevant range for 8,000 to 12,000 direct labor hours. Okay, so next, what do you need to do? So the second one is to identify the variable cost and determine the budgeted variable cost per unit of activity for each cost. That means for your variable cost, you are being given the total information just now. Remember, here you are being given the information for the variable cost. Okay, you are being given the information for the variable cost of 180,000, 240,000, and 60,000. This one for indirect materials, indirect labor, and for your utilities. And that information is for the annual operating capacity, and that is for 120,000 direct labor hours. So you have to work out how much is the per direct labor hour. So per direct labor hour, that will be 180,000 divided by your 120,000. For your indirect labor, that will be 240,000 divided by your 120,000. And the same goes for your utilities, will be 60,000 divided by 120,000. So then that will give you 1 ringgit and 50 per direct labor hour. So that will be for your indirect material. So for your indirect labor, that will be 2 ringgit per direct labor hour. And for your utilities, that will be 50 cents per direct labor hour. So once you have done that, then you go for the third step. That is, you identify the fixed cost and determine the budgeted amount for each cost. So that will be, the fixed cost will remain the same. So your depreciation will be 15,000, supervision 10,000, and property tax 5,000. The final one will be to prepare the budget for the selected increments of activity within the relevant range, and in this case the question asks you to prepare for every 1,000 increment. What does it mean? So you are preparing, the question asks you to prepare for from the 8,000 level of activity on a monthly basis. That means 8,000 hours per month, or 8,000 direct labor hours per month. Then you do for increment of 1,000. So from 8,000, that will be 9,000, and then 10,000, and then another 1,000 will be 11,000, and another 1,000 will be 12,000. So you are preparing the a range of activities, level of activities. In this case will be your direct labor hours. So you will prepare the activity level is your direct labor hours. So direct labor hours will be 8,000, 9,000, 10,000, 11,000, and 12,000. How do you know you need to prepare up to this one? So it depends on the question. If the question asks you to prepare from the range of 8,000 up to 12,000 with an increment of 1,000, this is how you do it. Then you identify your variable cost. So your variable cost you have already worked out in your step 2 just now. You work out the per unit. So at 1 ringgit and 50, 2 ringgit and 50 cent for your indirect material, indirect labor and utilities. Then you just times if with the activity level, or in this case your direct labor hours. If 1 ringgit and 50 is for one per direct labor hour, right? That one is the per direct labor hour. So 1 ringgit and 50 per direct labor hour. So if you are working on the 8,000, that will be 1.5 times your 8,000. So you will get this one. So 12,000. And you do the same thing, okay? If it is for the indirect labor, 2 ringgit will be times 8,000, you will get 16. And then if for your utilities, it is 50 cent per direct labor hour. If you are working for the 8,000 direct labor hours, that will be 50 cent times 8,000 will give you 4,000. And then total variable cost, you just add all these three, that will give you 32,000. And then you do the same thing at the 9,000 level, 10,000, 11,000 and 12,000. So how do you get 13,500? That will be 1 ringgit and 50 times your 9,000. So you will get 13,500. You do the same thing for your indirect labor. That will be 2 times your 9. 2 times 9 will be 18,000. And then the same goes for your utilities and so on. So you finish off this table, you will get all these figures for your monthly manufacturing overhead flexible budget. Okay. So for your fixed costs remain by nature, fixed costs remain unchanged regardless of the activity level, provided it is within the relevant range. Depends on the question, but in this case it is not, it doesn't change. So throughout your depreciation will be 15,000, your supervision is 10,000 and your property tax is 5,000. So then you just add your total variable cost and your total fixed cost. That will give you your total cost for each level of activity. Next, Fox uses the formula below to determine the total budgeted cost at any level of activity. So that means to identify at any level of activity how much is your cost. So that will be your fixed cost plus your variable cost. Then you will get your total budgeted cost. In this case, your total variable cost plus your fixed cost. So you will get your total cost. How do you work that into a formula? So that will be your total fixed cost is fixed plus your 1 ringgit and 50 times at any activity level. So in that case, you will have your, if let's say the question asks you to determine the total budgeted cost for Fox company with a fixed cost of 30,000. So if you have 30,000 as your fixed cost and variable cost per unit, or variable cost per, in this case, per direct labor hour is 4 ringgit. So at 9,000 direct labor hours, so you will count as fixed cost, that is 30,000 plus the 4 per direct labor hour times the 9,000 direct labor hours. So you will get, you can work it out as 66,000. The same goes if the question asks you to work out if you are working at 8,622 direct labor hours. So your fixed cost remains the same. That will be 30,000 plus 4 ringgit per direct labor hour times your direct labor hour of 8,622. So that will give you 64,488. So that's how you work it out if the question asks you to determine the total budgeted cost. From here, you can, because these are straight line, you remember y equals to a plus bx, that's a straight line formula. So you can draw it on a graph. So if you were to draw it on a graph, then you can see that this one will be your fixed cost line. That is, this one is your cost in thousands. So 30,000 is your fixed cost. So it is a straight line. So this one is your fixed cost. This one will be your budgeted fixed cost, regardless of your activity level. So your x-axis is your activity level and your y-axis is your cost. So in this case, your activity level is your direct labor hours. So regardless of the direct labor hours, your fixed cost remains the same at 30,000. What about your variable cost? So your variable cost will be, it varies, it increases as your activity level increases. So in this case, if you don't produce anything, or you are not working, you don't if you are working at a zero direct labor hours, still you have to incur the fixed cost. But as it increases, if let's say now you are working at 10,000, so you can work out how much is it for your cost. The same goes, so this one, if you are working at 9,000 direct labor hours, so your total cost will be 66,000, for example. So if you work it out at 9,000 somewhere here, so you can work out at 66,000. And then if it is at 10,000, what happens at your fixed cost, and so on. So you can work it out. This is how you draw the total budgeted cost line. Okay, because it consists of your fixed portion and your variable portion. So fixed remains unchanged, while your variable cost increases as your activity level increases. So that's how you draw your graphic flexible budget data. But for exam purposes, you are not required to prepare this graph, but this is just for your sharing of knowledge, so that you know how the flexible budget can be depicted on a graph. So from here, you can see that flexible budget report is widely used in production and service departments, a type of internal report, and it normally consists of two sections: the production data for a selected activity index. In this case, your activity index is your direct labor cost. It can be the number of units produced and so on. And then your cost data normally will be divided into your variable and fixed, and widely used in production and service department to evaluate a manager's performance. So flexible budget will give you a more richer information with regard to, as it flags based on the level of activity. And then, so if you see here, you can see that the OVID flexible budget report is being prepared at the same level of activity as the actual. So if your actual is 9,000 direct labor hours, then you are preparing your budget at the 9,000 direct labor hours. And then you are being given this information for the actual, then you already work out how much is your variable cost. So from there, you know whether you have a favorable or unfavorable variance. This one is the difference. For example, your indirect material, you budget to incur 13,500 and you incur more, that is 14,000. So you have a difference of 500, and that 500 is unfavorable, and you do for the rest of it. Normally for your fixed cost, if there were to be no changes, so there will be zero variance for that. So hopefully you have a better understanding on how to prepare a flexible budget report. And this question is just to test your understanding. At 9,000 direct labor hours, the flexible budget for indirect material is 27,000. So you are being given the information. 9,000 direct labor hours, flexible budget, indirect material is 27. So from there, you can work out the per direct labor hour, 27 divided by 9,000. So you will get 27,000 divided by 9,000, you will get 3 ringgit per direct labor hour. And then if 28,000 of indirect material cost are incurred, and now you are working at 9,200 direct labor hours. So you prepare the flexible budget report. So you want to know how much is the difference and is it favorable or unfavorable. So you work out whether this one at this level, is it favorable or unfavorable, and how much is the difference. So this one, you know it is 3 ringgit per direct labor hour. And then you will have 9,200 times 3, you will get 27,600, and therefore you will compare that with your 28,000. So you will have 400 ringgit unfavorable variance. So hopefully you have a better understanding on how to prepare the flexible budget report. Okay, with that, I thank you.